Hey, hello, everybody. My name is Melinda Morfin. I am your 2022 Professional Development Chair, and I am super excited to bring to you today Dr. Lawrence Yoon, who's going to give us an economic update. It's one of my favorite things every year that we get the opportunity to spend some time with Lawrence Yoon to educate us and bring us some insight on what's going on and what we may be looking toward here for the year ahead. So thank you all for joining us, and feel free to stay afterwards. We can talk about some market stats, maybe have some questions regarding where things are at, what Flagstaff is looking at as we end this year. With that, we'll go ahead and start. Mr. Lawrence Yoon, thank you so much for joining us today.
Thank you, Melinda, for inviting me. I hope everyone can hear me fine, so I will proceed as people can hear me. The 2021, what a fantastic year for housing market. Now we are in mid-January of 2022, the new year. Can we continue to have an outstanding performance for the real estate market? Certainly one of the hottest market or states as related to real estate has been Arizona. And certainly, you are positioned very well to get this lift that is happening in your state. I speak better with my PowerPoint slide, so let me put that onto the screen. So bear with me for 1 second. All right, so here we are. So let me first start with the broader economy. This is the unemployment rate. Back in April 2020, when we had the lockdown, it was quite a scary time at that point, both health-wise, how deadly is the virus, and it's been terrible, the number of deaths that this ugly COVID has brought to the country. But the economy, with the economy locked down, what's going to happen? Are we going to face another Great Depression of something that our grandparents or great-grandparents had experienced back in the 1930s, those terrible times. So the unemployment rate really skyrocketed in April 2020, but with each passing month, unemployment rate began to sink, and the latest, the December figure, was essentially matching the March 2020. So it looks like we're essentially back to normal. But that's not a full picture. As we all know, something is not right. And we can see that in this chart. Rather than count the number of people without a job, let's count the people with job. How many people have jobs? So if you ask organizations, say like the Intel Corporation, which has large chip manufacturing plant out in Phoenix area, how many employees do you have? You ask the University of Arizona, how many employees do you have? You ask the local Flagstaff hospital, how many employees do you have? So the payroll employment shows the following picture. So March 2020, you see the early part of the graph, then it sank from the lockdown, and then steady job creation. But the latest data is saying we are not back to normal. So even though unemployment rate may say we are back to normal, the job number is saying we are still down by 3 million jobs. So we still need to make some progress. And here is a very interesting data. At the state level, the latest data that's available is November 2021. So I'm comparing November 2021, the most recently available data at the state level, versus pre-COVID March 2020. First, Arizona, you can see is sort of different color from other states. So what is this orange color state imply? Idaho, Utah, Arizona, and Texas. Only 4 states have more jobs today compared to pre-COVID. So you are one of the outstanding performers in terms of the labor market, job market. All other states have job losses. If you look at the darker shaded color area, for example, New York State, they are down 7%, while Arizona is a little bit positive, 0.7%. So you see the variation across the country. It's interesting also to note that Alaska and Louisiana and Wyoming, they are down more so than most other states. These are oil producing states. And we know that oil prices are very high. Gasoline prices is irritating. Generally, when the gasoline prices are high, oil companies begin to produce more oil in order to bring it down. But they're not investing in new drilling equipment because what they are saying is they're very scared of what Washington may dictate related to the oil industry. I mean, certainly we have to worry about the climate change and the green energy, but also how do we make that transition? Do we stop carbon fuel immediately, or do we need more oil to ensure that people have reasonable prices on gasoline? So it looks like we will have high gasoline prices for a while, given that the employment, oil drilling jobs are still down in places like Alaska and Wyoming. Now, another way to look at the job numbers is the following. The red line shows the total number of people who are unemployed. So again, April 2020, large number of people lost jobs, especially in the restaurant area, hotel business, they lost jobs. Blue line shows the help wanted sign. We are looking for workers, help wanted, job openings. Let's look at what's happening today. Today, blue line is much higher than red line. In fact, it's almost 2-to-1 ratio. So theoretically, you can say someone who is unemployed to say, you know what? You can actually have not only one job, but 2 jobs available. So this is the situation we are in today, where there is essentially 2 job openings for each one unemployed. So very interesting development related to the job market if one looks at this picture. Another interesting development in recent data is the following. I mentioned about the payroll data, company data. Again, asking hospitals, universities, companies, how many employees do you have? That is the blue line, how many new jobs they're adding to their payroll, blue line. While the orange is what you get by asking people, do you have a job? So interesting part is the 2 months of recent data shows that orange line is really popping out, while the blue line is positive. So they're adding jobs at a hospital, they're adding jobs at universities and companies, but there's more self-starter entrepreneurs who are not capturing company data. So we are essentially seeing Americans who are essentially saying, companies, heck with you, I'm going to quit this job and I'm going to be my own independent boss. So people are starting their own business, maybe the restaurant business, maybe some computer software business. And another area people are going into is real estate. So we are seeing record high membership numbers, which means that it is fiercely competitive out there. I mean, it is tough business in terms of trying to get that listing, trying to find a new set of clients. So because we have a record high membership, Americans are at least having that entrepreneurial spirit. So you have to salute to them to say, yes, you have that business-minded spirit, but it is a tough business. We know it's tough. 20% of realtors will do very well. Maybe around 50% will do okay. And then you have the remainder 30% really struggling in the business. But we are in a very competitive environment currently, as Americans are essentially quitting their company jobs and saying, I want to be an independent self-starter, and some are going into real estate. Now let's look at the actual number of jobs in your local area, Flagstaff. So this is a 20-year chart on the total number of jobs. So if we start from year 2000, you can see that there were around, say, 60,000 jobs. And before COVID, it went up to 70,000 jobs. So you can say that's a steady progress. There's a little hump where there was a housing market bubble crash in the middle. But essentially from year 2000, right before COVID, about 10,000 job creation in the Flagstaff region. Then the lockdown occurred, so you see the job losses, and then making a steady comeback, almost back to prior condition. Let's look at the big city in Arizona, Phoenix, which is a big driver. Look at this chart. So the middle of the chart shows the housing market bubble and crash, but look at the long-term trend that has occurred. Essentially 600,000 new jobs in the greater Phoenix area over a 20-year time span. There was a lockdown, so they lost job, but look at now, even more job today than before COVID. So tremendous progress. And maybe some people in Phoenix area is saying, look, it's getting crowded here. I want to go where there's more fresh air, a little elbow room. Maybe they are considering Flagstaff, or at least having a second home in Flagstaff. So if the Phoenix is doing well, I think naturally Flagstaff will also follow some of the waves that is coming from the region. Now let's turn towards inflation, a concern for many Americans. It is at a 40-year high. So if you are younger than 40 years old, in your 30s, in your 20s, you have never seen this high inflation before. Highest in 40 years. 7% higher home prices, consumer prices, grocery, gasoline, and everything combined, 7% higher prices, highest condition. So given that inflation rate is high, some people are saying, how do I protect myself from inflation? I bring the cryptocurrency just because it is on the minds of many Americans. It is more discussed. So let's look at what cryptocurrency really means. There are essentially four sets of groups. One is people who don't understand cryptocurrency, stay away, it's a fraud. I think Warren Buffett is probably in this camp. He doesn't understand it, he's staying away. Then you have the short-term bored gamblers. They don't care whether it's which bird will fly off the fence first, or whether Arizona Cardinals will win the football game. They just want to gamble. So they are into the cryptocurrency just for gambling purposes. And then there are the midterm investors. These are people who are saying, look, Goldman Sachs is investing in cryptocurrency. Morgan Stanley is investing in cryptocurrency. Elon Musk is investing in cryptocurrency. Surely they must know something. I want to get in. So there are people who want to get in. And the final sets of investor is, why did cryptocurrency, in fact, was invented in the first place? It was invented to essentially say, don't trust government printing a lot of money. And hence, there are people who believe that you can have currency anonymity involved. So there are sort of long-term investors who simply don't trust the government, and they're in it for that reason. But I would say cryptocurrency, again, I don't know which area you fall into, but one safe area to go into as an inflation against hedge against inflation, is to consider the following. Home prices have shown to be a very good hedge against inflation. So if you know someone who is saying, look, I'm afraid of inflation, I want to buy cryptocurrency, you say time out. Maybe you want to consider real estate, because real estate has shown to be a very good hedge against inflation. And you can look at different decades. For young people, you don't remember the 1970s, but 1970s, there was high inflation. You go to grocery store, every time you go, it's higher prices, high inflation. But what was home prices doing? It went up to 9.9%. So even as consumer prices were rising 7.1%, real estate values were rising 9.9%. 1980s, very similar condition. 1990s. So you can look decade by decade, essentially home prices have shown to be a very good hedge against inflation. One reason for that is when there is an inflation, usually the rents rise. And when the rents rise, that provides some support for home prices. So if someone is concerned about the inflation and how do you diversify so that you are hedged against inflation, show this chart and say you may want to consider real estate as a good hedge. Now let's look at the housing market. This is a national data on home sales, essentially 12 months before the COVID and post-COVID. Right in the middle is the lockdown. So you can say before the lockdown, home sales were increasing a little bit, decreasing a little bit, nothing meaningful. But after the lockdown, and when the economy reopened, home sales surged way, way above pre-pandemic conditions. So you can see that home sales are much higher, elevated compared to pre-COVID. There's a little swing that you see, but still, even with the swing, much above pre-COVID days. Now we have record high membership, realtors out there, but home sales are still clicking along. So home sales are clicking along in the marketplace. As related to the newly constructed home sales, it's coming off a very depressed level 10 years ago in 2010, 12 years ago. Then making steady progress. We need more inventory. Therefore, the builders need to build more. Every time builders build more, they can sell it easily with a profit. There's a profit motive. And why is newly constructed home sales falling in recent months? And it's falling because the doorknobs, window frame is stuck in some container ship out in the ocean. They're unable to unload, and hence it's declining. So this is a reflective of supply chain disruption, and not necessarily that somehow the buyers do not want to buy new homes. They want to buy. They're simply being delayed because of the supply chain disruptions. This is the demographic profile of the US population. So how many Americans at each age? For example, people in their 90s, there's not that many. So if you live to be the 90s, congratulations, you lived a long life, much higher than the normal life expectancy. If you look at how many people are age 1, it's about almost 4 million, the first line, the green line, first line about. Then I put 2 bars, 2 red bars to indicate 2 critical age. First is age 31. That is the median age for a first-time buyer. So right now we are at a peak in terms of people who should be first-time buyers. Yet it is a big challenge. Home prices are high. Now the mortgage rates are rising, but the demographic is implying that we should have a very strong first-time buyer activity. The second red line is age 65, the traditional age for retirement. So as people retire, as you know, people want to go to Arizona. First, maybe it's more the lower tax burden, certainly compared to California. So, Californians are moving into Arizona for a lower tax burden. But there are also the weather. People who have certain lung issues, they said dry heat is very good. So people want to move to Arizona. Given that you see this graph, and say next year, what's going to happen next year? Just think of this graph as moving one step rightward. 2 years from now, 2-step rightward. So what this chart is showing is that for the next 5-7 years, there will be more people clicking at age 65, more people wanting to come to Arizona over the next 5 years. So this is quite a good trend, demographic trend that should continue to support real estate in places like Arizona, Texas, Florida markets. Home prices in the meantime is record high. And some people say too high. So top line shows the median home price. The straight median currently around $350,000 across the country. The bottom line is a ratio metric, home price to median income ratio. So now it's approaching what it was similar to 2005. In 2005, we had a housing market bubble, then bubble crashed and it went down. So given that now we are matching up to the bubble condition, is home prices ready to collapse? And answer is no. First, the underlying fundamentals are different. We don't have those funny subprime risky mortgages that just gave loan to anyone who wanted it. People who are getting mortgages are of sound credit quality. So one fundamental difference. Second big difference is that back in 2005, we produced way too many homes. There was an oversupply. But today, as you know, we don't have enough listings. There's a housing shortage. So those are two big differences. But another way to put it is the following. Most people buy home using mortgage, and given that mortgage rates are at absolute low points, at least was last year, mortgage payment to income is not anything alarming. It is very, very manageable. And hence, it is completely different picture now versus 2005. This is the home price appreciation in Flagstaff. So again, 2005, home prices increased in 1 year by 30% in 1 year. Then there was a crash, foreclosures. Now you are seeing home price increase, almost 30%. So are you going to repeat? And again, I would say it's a different condition today versus back in 2005. No risky mortgages, no overproduction, no oversupply, and also mortgage rates are much lower currently. Even this year, when the mortgage rate is anticipated to increase, it would still be much lower than what happened in 2005. So it is a different situation. So you see the home price appreciation being very, very strong, but it's on much solid foundation than before. Mortgage rates, it will be increasing, no doubt, because Federal Reserve has indicated that they will be raising interest rates, and that action, or at least that signal of those action, means that mortgage rate will make a move even before the actual decision by the Federal Reserve. My best guess is that by year end, December of this year, average mortgage rate will be about 3.7%. December or last month, it was 3%. So it's going to go from 3% to 3.7%. So keep that in mind as what's going to happen. Now, in the meantime, we have record low inventory levels. So we need more home building. We need more listings to show on the market. And I believe in 2022, there will be more inventory. I would not say we are getting back to normal. I think we will still have housing shortage, but there is sign to say there will be more inventory. First, I mentioned about the builders. They want to build more. Hopefully, some of the container ships can deliver quickly so they can build more. So the home builders will build more. So that's the one reason why inventory will increase. But another reason is the following. The top line shows people who are delinquent in their mortgage for more than 3 months, people who have missed their mortgage payments. Bottom line is foreclosures. One thing to note is that this time around, even as the delinquency increased, foreclosure was at absolute historic low levels. And the reasoning was federal program of mortgage forbearance. You cannot pay your mortgage because you lost your job. Don't worry, we will not foreclose on your home. So you had that mortgage forbearance period. But that program is winding down. So now people have to make mortgage payments or they will lose their home. So they're now, some people who are delinquent may be forced to sell their home. Let's hope they can find jobs. And again, jobs are plentiful. Jobs are everywhere. So let's hope people can find jobs. But for those who cannot find job or the job skills do not match, some people may be forced to sell their home, but there are plenty of ready buyers out there. So this is another source of inventory. Finally, we also have to acknowledge this terrible tragedy that COVID has inflicted on the country. This is the number of people who died in America, number of death certificate issued. Typical year, maybe it's about 2.5 million people who die. It was rising sort of before COVID because of the opioid epidemic, and also we have a more aging population condition. But look at the sharp upturn that occurred from the onset of the COVID. So this is a terrible toll that has been inflicted in America from this ugly virus that came to the country. And this is the reality. Another reality is, I don't want to sound callous, but there are widows or people who have passed away and it needs to be an estate sale. Maybe there was a couple living and one person passed away. They don't need a large house. They want to downsize. So they need help in making that adjustment. So the fact that we had this sudden upsurge in number of deaths also means that there are people who are needing help related to readjustment related to their housing. Some are estate sales, some will need to downsize. Is the reality. So the realtor's role is helping people make that adjustment. I'm just reflecting the reality. I'm not trying to say, death led to more business opportunity or anything like this, but the reality is that America suffered this terrible tragedy and people need adjustment in their housing needs as to, what needs to be done. So Increased inventory expected in 2022 from more building activity, mortgage forbearance program winding down, and the number of deaths surging. So all this will contribute to increase in inventory. Another part I wanted to focus on is the office sector because work from home phenomena. I am at office here in Washington, D.C. In fact, I am 2 blocks from the U.S. Capitol. It is empty. DC is empty. I mean, everyone is just working from home. I know New York City is pretty much empty. So you can look at the left column, New York, Washington, Chicago, where they are not using offices. They are saying, okay, let's lease it out. Another vacancy, San Francisco, Los Angeles. But areas where there is increased demand for office spaces are occurring essentially in the southern states, like Austin, Texas, Miami, Florida, Palm Beach. And let me try to identify Phoenix. I know Flagstaff is not here because of a small market, but interestingly, I cannot locate Phoenix here, but you saw the previous chart where the Phoenix job market was really booming. I need to recheck my data to see where the Phoenix would lie, but certainly given the strong market in Arizona, you are certainly seeing more positive development and not a negative development as you see comparing this to a chart. So let's wrap up with this forecast. What to anticipate in 2022? We are tallying up the 2021 final data. So it's not yet final, but once we tally it up, it looks like unit sales would have increased 7% in 2021. Home prices up 14%. Which means that dollar volume would have risen in 2021 by 21%. Very solid gain, one of the best performance. But in 2022, unit sales will come down a bit, even though we get more inventory because the higher mortgage rate will chop off some first-time buyers. But home prices will continue to increase because we have housing shortage, so the dollar volume will continue to increase. Another way to put it is, if you thought last year was a good year, 2022 will essentially match last year's performance. So thank you very much for listening and giving me this time. And now I am going to turn it back to Melinda. Thank you.
Thank you so much. That was invaluable information that you provided for us. And joining us all the way from Washington, D.C., we certainly appreciate your time. I'd like to see if anybody had any questions specifically to Lawrence Yun. Those are all wonderful things to know about. 2022 should be a great year that we saw in 2021. It is definitely competitive out there. We can see that here. We're experiencing that quite a bit. A lot of people getting into real estate, and it's a great job for an entrepreneur. I think it was really good insight in reading about the self-starters and entrepreneurs. More people of the great, what do they call it? They're great. People are pulling out of their jobs. I apologize. The word is leaving me right now.
Resignation.
Resignation. Thank you. I knew recreation was not it, but that I think people are also looking to that too. They're especially coming to Flagstaff. And I believe last year you had mentioned that Coconino County was actually in the top 10 as far as where people were moving when people did start migrating about. And so we were number 6, if I remember correctly. So I assume that we're probably still on track for that. We're seeing people still wanting to move outside of the city. What can you prepare us for as far as city and growth? You know, any insight as far as where our market is going, how Flagstaff is still seeing so much growth that we can maybe be prepared for?
One thing I would say is that there could be a little divergence between jobs and the strength of the housing sector because of the work from home phenomena. Hawaii is really suffering economically in terms of job. But Hawaii real estate market is booming because people are saying, well, if I can work from home, I'm going to work from Hawaii. So the demand for real estate has really boomed, even though the job market is not recovering in Hawaii. But certainly people will say, you know, I'm in Phoenix, my office job is in Phoenix, but I don't have to come to office. I'm going to be out in Flagstaff. Or people in LA, you can easily envision many Californians wanting to have a more peaceful life in Flagstaff. So thankfully, you do have jobs. But even without the jobs, I think your real estate market will be strong from this work from home, work from pleasant location, and Flagstaff certainly provide that opportunity.
Great. And how long do you think it'll take for us to see some gains in the economy from these self-starters and entrepreneurs? Is there a typical lag time, or is this a different situation? We're not really sure what to expect, how it will impact the overall economy.
In related to the economy, I don't see any recession. It's going to be a continued expansion. Let's hope that we get the 3 million missing jobs back on track this year. Arizona is already surpassing all the missed jobs. But the self-starter, as you know, sometimes trying to get a mortgage among the self-starters are more difficult because of the fluctuating income rather than W-2 income. But it certainly adds to the commercial real estate in terms of demand for retail spaces, demand for warehouse demand. And some self-starters are doing, very fine in this new economy where they are just, Americans are very creative. But we also know there's a large risk involved in being on your own.
Sure. And we had a question here. I'm going to go ahead and open up the Q&A in the chat box here. Go ahead and put your questions in the Q&A section down there. But one of our questions from Dusty Roten is, can we get Flagstaff data on regular, consistent basis? I know you're pretty busy. Is that something you're able to produce for us?
In terms of I prepared this presentation knowing that I am presenting it, but we do have some regular reports, local market reports, showing home ownership rate, the job situation, the commercial real estate market, but those are all in our website. So the best way to go is just, a Google search at NAR Research. And once you are in NAR Research, you will look for some local market report, either residential or commercial, and you will get some updates on those figures.
Right. And there's it took me years to realize that the website, the National Association of Realtors website, is just a wealth of information. You could spend an entire lifetime and still not get through all the information that's there. And especially yours there, Lawrence, you've got your charts, so you can access all the charts from all the economic updates, including the one that you did previously, looking at more of the national economy that we were able to participate in recently. But all of that information is there, so don't hesitate to reach out to that website and see what's there with those stats and information, quick little messages, updates from you as well, which are fantastic. So, and the other one was, are we able to get slides for this presentation? I assume so.
Yes, I will send that over. Mm-hmm.
Awesome. And so he'll send it on over to us. Once we get those slides, we will send it on out to y'all so that y'all are able to access those slides as well. So absolutely, we'll get that information to you. Jerome Naleski asked, in buying groceries and goods, it seems that inflation is more than 7%. Do you think that is correct? It just feels higher.
So the 7% is based upon what they call basket of goods, buying clothes, buying toys, going to the grocery store, all combined. And they are looking at the prices and now versus what happened 1 year ago. Now, some people say it could be slight underestimate. I think there is one aspect of underestimate, which is the rents. Government data is saying the rents are rising about 3%. But when I talk to most real estate practitioners, they are saying the rents are rising higher than 3%. So there could be some mismeasurement related to the rent data.
Sure. And we see on that scale, as far as Flagstaff, the median income, it's a struggle to have enough income, especially with just one individual making a decent job here. To be able to afford in Flagstaff. How long can we sustain a town where the income is not able to allow people to create the infrastructure that we need, your students, your teachers, when housing isn't available to them, to where we're not going to have a strong community? Is that something how do we approach that?
So, the affordable housing is also a key component of keeping the community very healthy. Sometimes the numbers simply don't work, which is the reason why some things like tax credit or government funding to build homes, affordable homes would make more sense. In some areas where there is a disused commercial property, say shopping mall or office building, is it possible to convert it? Or say lodging, especially with the business travel likely to die down, that some of the hotel may have excess capacity. But trying to make the numbers work really requires some dollars. And this is where, from our perspective in Washington, we constantly talk to the policymakers to say, we need more affordable housing, but to make the numbers work, it has to be some kind of tax credit, tax incentives, or some government funding to get it done.
Okay, so that's where we've got to focus our efforts then, huh? Makes sense. Okay, thank you for that. Jessica Gerard asked, will there be any impact on the extra fees that are being but on people financing second homes? be any impact on the extra fees for people that are financing second homes? Jessica might have not explained that very well.
It's a new rule. I don't know if it's already in place or not, but Fannie and Freddie, who are the major purchasers of mortgages, from ordinary consumers' point of view, they're just going to their mortgage broker, local lenders, but local lenders are selling that mortgage to Fannie Mae. But in order to sell that, they have to pay additional fee, which means that additional fee may be charged to the consumers on second home purchase. I'm not sure how much of an impact. We have seen second home sales, being very solid last year. Again, work from home, work from Hawaii and such. But those are mainly cash transactions. So even without a mortgage, they're still buying. So how much of an extra fee added on for second home mortgage will deter surely will deter, but is it going to be meaningful or not? I'm not sure.
Okay, thank you. John Wasson asked, how is your son doing? Last time you were here in person, you talked about him investing in Bitcoin. Has he moved to Hawaii? Is that why you're referencing Hawaii?
Personally, I've been very, very cautious about Bitcoin, but our son, he's a young kid. Now, he's working at the Amazon second headquarters, because remember, Amazon wanted to have the second headquarters in New York City, but they complained, so they brought it over to Arlington, Virginia, which is where we live. And he's fortunate; he's a computer guy, software developer, so he has there. So he likes all this kind of stuff, and he see his stock portfolio go way up and way down, bouncing up. But he's a young age, and he's interestingly, he's not panicking one way or the other.
In our youth, we fear risk a lot less, regardless of what that risk is, right? And who knows? My son is 22 years old, and he keeps telling me I've got to get into cryptocurrency and sending me stats all the time. And it's just not where I feel comfortable with that. But I think you touched on something that it could be something that we might need to be forced into feeling comfortable with. Maybe do it and forget about it and not worry about it until it brings you back some profits. Thank you for that. So Dan Hakes asks, thank you for your insights and analysis. What in our current economy could throw your current projections off course? Great question. I.e., in 2005, it was bad mortgages. What might be looming in the dark for our current economy? You mentioned that that's not the case. Mortgages are not going to impact the market, but is there anything that we should keep an eye out for?
Just for time purposes, I will have this as a last question.
Okay.
But the one thing that I'm constantly monitoring is this inflation, because somehow the White House has been indicating throughout last year that it's nothing to worry about, it's going to disappear. Well, it's not disappearing. But the Wall Street, I think, is still believing, the bond market is still believing that it's going to steadily diminish this year. If somehow it doesn't diminish, inflations continue to move higher and higher and higher, the bond market will suddenly flip. What that means is that interest rate environment will be much higher. So mortgage rate, my forecast of 3.7%, it may wind up being 5% if the inflation suddenly surprises on the upside. And of course, higher mortgage rates suddenly moving up that high can have a negative impact on the real estate market. Now, fortunately, not like the foreclosure crisis of 2005, but nonetheless, high inflation means higher interest rate pulling back some of the real estate momentum.
Excellent. Thank you so much for that. And thank you so much for your time. I know you've got to get going. So we will track you down and we'll have you back next year, maybe sooner. Should those things happen, we'd love to get your insight at any time. So thank you again so much, National Association of Realtors Chief Economist. We appreciate your time and we will see you next year. Stay tuned for the rest of you. Thank you so much. We are going to go into, I just thought maybe I would read off a few stats. Also to let you know that this starts off our year 2022 for our first Lunch and Learn, but we also have more educational opportunities coming to you. The next one will be next week. I'll pull ahead just to make sure that I can share my screen here. I can. I'd like to show you our calendar. If you're not familiar with how to get access to information on what events we're going to be having, what our Lunch and Learns are, you can go to nazrealtor.com. Click on calendar of events on that homepage, just right smack dab in the middle. Come to the calendar and you actually see where you can register for these things and how we have what's coming for you. for the year. Again, like I said, next week we've got January 20th at 11:30 to 1. We hope to see you at Little America. If you haven't registered yet, you still can. We're going to be having Sarah Dexter, the Comprehensive Planning Manager for the City of Flagstaff, discussing the regional plan. Flagstaff is growing, we can see it, but how is it growing? What's the city doing? Where are things being impacted? How are we going to prepare our clients and ourselves in the world of real estate? We'll also have Mark Arribas, Heritage Preservation Officer, Neighborhood Planner for the City of Flagstaff. He'll be discussing incentives to improve historic properties. Thanks, Dan Hakes, for sponsoring that. We'll see him there as well. And then a week later, the end of the month, we're going to have fraud, hackers, and the dangers of social media. It seems obvious, but people are still getting in trouble with it. Things to avoid, things to take notice of, and how to run your business, work your business in a way that's safe for you and for your marketing and advertising. That will actually give you some CE3 for legal issues. So these are great opportunities to, like me sometimes, wait until the end of the year to take all my CE classes. There's things throughout the year to schedule some time. It's valuable information. It helps you keep abreast of the market, of real estate, and hopefully allows you to do your business a little bit better. That's my job here at the Professional Development Committee, is to bring some insight, information, some training, whatever that may be. So if you would like to see things this year offered to you that you'd like to learn, whether it's designations, whether it's learning about septics, doing a market analysis, please feel free to reach out to me and Belinda Morphin. You can go to NAZ website and actually see my contact information. You can also, if you're passionate about education or any government, you can sign up for a committee. There's access to what those committees are on our website. I'll just kind of take you there so you can see NAR committees, learn a little bit about them. You can reach out to those different committee chairs, find out a little bit more and see if one speaks to you. We'd love to have your involvement. Like I mentioned previously, an association and its community is only as strong as its members. So we need your help. We'd love to have your participation and ideas. And coming this year, we also have our not only professional development, but we'll be focusing on personal wellness segment within the professional development. So we're looking for your ideas. If you haven't seen it yet, if you haven't completed it yet, there's a survey that we sent out. Please go ahead, take a couple of minutes to fill that out. If you're interested in learning more about personal wellness or education, you could send your suggestions. But we're looking for everything. What can the association bring to you that can offer you some sense of feeling balanced in your life on a personal level, whether that's financial, whether that's spiritual, whether it's emotional, whether it's physical. We want to help you do those things, and we all need those things. I'm excited about it. So bring your energy, your enthusiasm, your ideas. Let us know. Fill out that survey. If you'd like to join us, we'd love to have you. So reach out to us, and let's get some great things going for 2022. With that, that's all I have here. Again, if you have any questions or want more information, reach out to me, Melinda Morphin, and you can also reach out to the association as well. So, any questions before we take off? No? All right. Well, thank you all for making time for your day. We've got a 45 minutes segment here, so hopefully you can move on with the rest of your day, and we look forward to seeing y'all next time. So stay tuned and have a wonderful day. Bye-bye.